Thank you, everyone, whoever has joined right now on such a short notice. Um, my goal was to give people an idea on what is private money lending, because a lot of people have asked, that, we want to buy a rental property, a single family, or should we be buying a note, or should we be investing in a syndication? What are other ways to start generating cash flow? So there are a lot of ways to, generate cash flow as well as diversifying your cash. And the way I do it is that just to give you an example, I own a couple of duplexes. I own a 9-unit. I have invested in a note. I have also lent money, as a private money lender. I have invested in a coffee farm in Panama, so that I have tried to diversify as much as possible, so that if something happens, then I at least I'm assuming that all of this will not fail at the same time, right? It's possible, but hopefully not. So just to give, I want to get started on what is private money, and how to do it, how and why to invest as private money lender. I'll go through a small presentation, and then I have one of my friend who I have known since last year, as well as he's a flipper and a turnkey provider. So he'll talk about how they do the private money lending. So what is private money? So a lot of these real estate investors, be it flippers or turnkey providers, and they spend a lot of time finding the deals, right? They do their own due diligence. Local, they build the relationship with brokers, agents, property managers, even wholesalers, or they may be doing wholesaling or bird dogging. Once they find the deal, without money, they cannot complete the deal, right? The money is the key. So they have to also, actively work on bringing in the money, right? Because most of these deals, even the deals, some of these deals I am doing, require me to, close the deal in 7 days. And I'm pretty sure most of you know that conventional financing is not the way to go when you are trying to close a deal in less than 7 days. And on top of that, most probably you are working on multiple projects at the same time. Conventional financing may not work. This is where private money lender comes into picture. So private money lender is a non-institutional individual or company, people like you and I, that would loan money, and to this real estate investor. It could be a business, it could be someone but as long as the money, you lend is secured by a note and a deed of trust, then, your money is somehow secured, right, or mostly secured. And that would give the real estate investors the money they need to close the deal, right? So it's helping both, right? So you are going to get a really nice return. You won't be able to even compare to what you are getting from your bank account, right? 0.01, 0.05%. I don't even look at that, and I'm pretty sure you don't. But and whereas the real estate investor or the business who is doing, turnkey work, they get to close the deal much faster, right? The benefits of being a private money lender, pretty much that's what I have learned, is that you almost have no liability because you are acting as a lender. Think about it, the bank who owns your mortgage, do they have any liability? Nothing, right? Means whatever you do in your house, whatever happens, they own the, deed of trust, the mortgage deed, and that's about it, right? Let's say you rent out your property, you have vacation home or a rental property, if something happens to the tenant, who is liable? The landlord, you, not the bank, right? So same thing, the second point is you don't have to worry about tenants or toilets as you are a bank. You have security because you would be holding a promissory note against the property, right? So you have a security as well. You also have the legal right to take back the property if things don't work out. Let's say someone stops paying, right? Then you can take back the property, and that's exactly what is called short sale or foreclosure. Sometimes you short sell the property and foreclosures is where the bank or REO owned. You must have heard a lot of this different terminology, but in the end, that means that somehow, the note holder wants to get their money out or money back, right, if things are not going well. You get high return because the landlord or owner who borrowed money from you is trying to flip or refinance the property after completing rehab, right? So most of the time they're flipping. Or the goal is, let's say, if it's me, and I may ask for private money as well, right? But my goal would be to refinance the property as soon as I finish the rehab and return the money, right? So there are this is the reason, because mostly it is short term. You are going to get high return, and I'm talking about returns between. Again, don't quote me on it. I would have Jonathan, but I have seen it between 8 to 12. 4 or 5 years ago, they were 15%. Of course, the interest rates have not, are not up to par anymore. But again, those are pretty significant return annually if you compare 8 to 12%, which are secured by a note against the property. How to become a private money lender? Here are the steps I would ask you guys to take before you decide to jump into this. And first one is establish your financial strength. So can you maintain your current monthly expenses and still invest this money as a private money lender, right? That's very important. This is same as, if you are investing in stocks or, anything else. But remember, stocks or some other investments are very liquid. So tomorrow, if you need the money, you are going to sell it. Maybe at a loss, maybe at a gain, but you can take back that money, right? So you want to make sure that, let's say you signed up for this and you are saying that, okay, in 6 months, I'm lending you money for 6 months. Then you should be ready to wait for 6 months, right? And it could be longer too, things don't always go as planned either, right? So you guys should be ready. Let's say if you have said 6 months, then just keep in mind that it could be 9 months too. So that's very important, that if you are in debt, and you can't cover even your monthly expenses, then there is no reason to try to invest in this, right? Because as a private money lender, your investment would be, it could be depending on the property, but most of the time it's between $50,000 to $100,000, because someone is trying to buy a 50, 60, 70 grand worth of property and rehab, then they are going to ask you for that, cost of purchase, right? Because the flipper, turnkey provider, they'll spend money from their pocket if need be on the rehab. Or maybe they'll be asking you money for both, purchase price plus rehab, right? So you have to keep that in mind. Second is decide your criteria. Do you want to invest in single family, multifamily, commercial? How would you prefer to invest? Short term, long term? I've seen short term being 6 months to 12 months, and there is long term, or 18 months even, and then there is longer term as well. If you can, check the comparables or broker price opinion of the property, because that or the so basically the area, surrounding area, so that would give you an idea. From the borrower, ask for some examples for how long they usually keep the money, what kind of interest rates they offer. Is it first lien or second lien? If you're starting out, I would not ever do second lien, and especially the market is getting really hot right now, so there is no reason to go with second lien. And I'll explain in next page what is a first lien and what is a second lien. Again, same thing, ask for interest rate. How is it paid? Annually, monthly, quarterly? So that you are aware up front, right? You are, let's say you are not tying any of your expenses to this income, right? So thinking that, I'm going to get this interest, check monthly, so that's what will cover my my mortgage. Hey, Siva, if you click on the phone icon, it will show you the numbers you can use also. So there are tons of numbers. and I dialed one of these, if you can hear me. Sorry, guys. I'm sorry about that. Second thing is make sure all the documents are in order. So once you have decided and you are going with it, you want to check all the documents they provide. And if you are not sure, talk to their escrow person or, talk to your own real estate attorney. Always give the money through escrow company. Remember, even if this is the person you know really well, I would not, even if it's my close friend, I wouldn't lend money directly to the borrower. It would always go through the escrow company, right? Now, what is a lien? So first lien is the primary lien on the property that secures the mortgage. That's the primary loan that pays for the property, and it gets priority over all other liens or claims on a property in the event of a default, right? So that's your main mortgage, right? Let's say you got a property, at least in San Francisco Bay Area, a lot of time people end up getting two mortgages. There is a first mortgage and then there is second mortgage, right? So the primary first lien or primary lien is referred as senior lien or first mortgage. So basically that gets priority over all other liens, and that's why I mentioned in earlier, slide deck that I always recommend you to look going in as a first lien holder when you are starting out. Maybe once you become really savvy in this space, once you know the borrower, then you may be able to work out second lien position, if that makes sense. So second lien debt refers to loans that are reimbursed only after loan balances on senior liens are repaid in full following a default. So because of this, as I said, second lien has, as the name suggests, right, it has second position on the note, right? So just to give you an example, if there is $100,000 worth of property and the first lien already owns $100,000 of it, right? So there is a mortgage, first mortgage, which is $100,000, and this happens when the properties go underwater, and you are owning a second lien of $20,000, and the borrower defaults. Then the first lien gets paid first. So if the property got sold for $90,000, then the first lien of $100,000 would get paid, and you won't get anything. Let's say the property got sold for $110,000, the first lien would get $100,000 of it, and even though you have a second lien of $20,000, you will only get $10,000 out of it, right? Just to give you an example again, don't pick on me. There'll be the sale expenses, these kind of expenses. I'm just trying to explain how the first lien and second lien works, right? Also, second lien is referred as second mortgage or junior lien. So if you hear any of this terminology, you know what it is. Before I move on, also I wanted to just give an idea about which I did not cover in the presentation. I thought it's not tied. It's tied to your overall investment strategy. It's something called accredited investor, which is what SEC requires. So there you may see some investments when you are investing in syndications or some crowdfunding websites that they require you to be accredited investors. And what that means is that if you're single, for past 2 years, your income has to be over $200,000. If you are married, filing jointly, your income has to be over $300,000 for last 2 years. And if you are not able to meet that requirement, but if your net worth is over $1 million, then also you are considered as an accredited investor. So as an accredited investor, you can pretty much invest in anything which is available for you to invest. Pretty much, that's what I've seen, that I can go with any syndicator to invest. I can invest in coffee farm in Panama. As I said, I can go and do whatever I want with my money because you are able to take more risk. Now, but then there are certain investment like private, PML is also possible that you don't have to be an accredited investor. Then the second level is something called sophisticated investor. And what that it is that you have to build, it shouldn't be a brand new connection with your borrower. So you have to have like 2 to 3 calls with your borrower, kind of make acquaintances so that you can say that the borrower can say that, okay, I know this person, right, and he's a sophisticated investor. So this is just to give you an idea because we have Jonathan Madnick on the call. He's from REI Trader. I have been working with him for some time. He's from Birmingham, Alabama. He's my real estate agent. He owns the firm where they are flipping the properties as well as they rehab the properties and provide it as turnkey properties. And the reason he's on the call is that I want him to talk about how they work with the private money lenders, right? Because they always need money as well. So again, I spoke about it from the investor side. What we need to do, what is private money lending, and what all we need to do. But I think it would be good for us to hear from someone on the borrowing side, so that he can give us an idea on things they do to make sure that the private money lenders are getting paid and they're happy and they go with Jonathan's business again and again for lending the money, right? So and this is some of the documents checklist. We'll be going through more than this, but just wanted to give you guys an idea. So Jonathan, if you let me know where do you want me to start, which document you want me to open, and we can go through those documents.
Okay. First, let me thank you for having me on tonight. It's a pleasure. You and I have been building a good relationship over the last year of purchasing properties here in Birmingham. A lot of people should understand that when you're investing your private funds, you want to work with people that you feel that you could build a strong relationship with. And with us, every relationship is strategic. We have a lot of lenders who've been lending to us for many years, and that is just through the strength of what we do, our experience, and a lot of our private money lenders, I would say probably more than 90% are referred from other people. Just a little bit of background about me. I've been a real estate broker and also real estate investor for 17 years. I started in Fort Lauderdale in Miami, where I'm originally from, and I have bought and sold over 1,000 properties. I've been in the Birmingham market for about 6.5 years. We're one of the largest investors when it comes to single-family flips or turnkey flips or wholesaling properties, or even buy and holding properties. At any given time, we buy and sell more than 10 properties every month. We currently have 26 projects going on right now. I do have a business partner, Jeff Shadrick, who handles the construction side. Also, he's got a financing and bank background. We have a support team as well as approximately 25 to 30 individuals on a renovation crews that are divided into 5 to 6 crews at any given time. So we are doing projects anywhere on the low end from $30,000 to $40,000 up to $500,000 plus doing developments as well. So we do a combination of a few things, and you might hear me mention a few of our strategies. And just so you understand a few of them before we actually start, the first one is really called a retail flip, and that is when we buy we renovate, and then we resell the property to an owner-occupant, someone who's going to live in the property. That's retail flip. The second is called a turnkey flip. This is when we purchase a property, we take title to it, we renovate the property, we put tenants into the property, it becomes a performing asset, then we turn around and sell it to another investor who is looking for passive long-term income as a buy and hold investor. So REI Trader, we have done all the heavy lifting to get it to performing, and on the day of closing, our passive investor who's purchasing the property is cash flowing from day one. The third is what we call wholesaling. This is essentially when we purchase a property, we get it under contract, and then we market the property and we assign our rights to that contract to another investor who's actually going to close on the property, and we take the spread as our fee. And lastly is we broker a lot of deals for other investors, whether they're doing retail flips or turnkey flips, or if they want a joint venture on wholesale deals. So we do a lot of different things, and it's important when you're looking for an investor like myself. The most important thing is, what experience do they have in the marketplace? And that's really number one. Number two is you want to feel like they can provide complete transparency and honesty when it comes to how they operate. And three, we're always happy to give references, not just from some of our other private lenders, but from some of our closing attorneys that work with us. The most important thing for us is that we've never defaulted on any loan, and we do more than 125 a year. We have several $1 million of loans out on our projects. We would rather personally take a loss on a project than let one of our lenders take a loss. It's never happened, and we hope it never will. So with that, I think, Alpesh, why don't we start with the 3 ways to passive investing? I think that will give everyone a good overview.
Here you go.
Thank you. Okay. Alpesh did a great job of giving an overview of just what passive investing is. And really, it's for those investors who are not sophisticated when it comes to buying, fixing, and flipping properties. It gives you the ability to really be hands-off, not get your hands dirty, but to have have your money secured with a particular property. It gives you the ability to invest in real estate, but without the challenges of finding and renovating and flipping properties. It also gives you the ability, the flexibility to maintain your current job, and as well as have a secondary revenue stream or income stream on the side, where now you have multiple streams of income. I'm a big fan of Robert Allen, Multiple Streams of Income. He's got some great books on the subject, and I urge anyone to maybe pick up one of his books. And the last thing is more redundant to what I just said. You create that passive secondary cash flow just in addition to your current income. So that just gives you an overview of some of the benefits of being a passive investor. Now, everyone has their own programs for how they structure their private lending. We essentially have 3 options. The first is more of a hybrid model. This is what we call a 10% interest-only loan. And I won't go through each bullet point because I'm sure Alpesh will provide this documentation to anyone who wants it via email. But essentially, you would loan on the project. It's 10% interest loan. And at the conclusion of this project, you have exclusive first right to purchase that property and keep it as a turnkey rental in your portfolio. So what that means is that from the time you close on the property, you're getting a nice 10% return on your principal. And then when we complete the project and we put a tenant into the property and we look to resell it, you have first right before we put out to anyone to say, hey, I want to purchase that property. And by doing so, at the time we do resell the property to you, you're getting your principal plus the accrued interest of 10% returned back to you. And then from day one, you have a cash flowing asset. So that is option one. Option two is a 12% interest only, and this is strictly where you are just going to loan your funds on the property. Our intention is that we're going to buy this property and we're going to flip it, whether it's going to be a retail flip or a turnkey flip. Once we complete the entire process and resell the property, you're getting your principal return plus 12% interest. Now, it's important to understand that we don't pay monthly on our interest. It's accrued. So at the time we have a cash event, whether we resell the property or we refinance the property, you would pay back your principal plus your interest at that time. The third option, that is when we are looking to hold properties in our portfolio, in a rental portfolio. And essentially, when we're done renovating the property, we put tenants into them. We are going to keep the property in our rental portfolio. We do a 7% interest only with a 1 year up to 10-year note that's amortized over a 30-year period. With the monthly interest payments, obviously, again, it's being accrued. You're being paid out when there's a cash event, when we refi or resell the property. And at the time we do that, we pay an additional 3% on top of the 7%. So in a sense, whether we hold that property for 12 months or 24 months, you're getting that 7%. But at the time we have a cash event, again, a refi or a resale, we're paying that 7% accrued, plus we're paying another 3% on top of that at loan satisfaction. Alpesh, any questions on those before I kind of continue with the benefits?
I don't have any questions. If anyone else has, please chime in.
Yes, please. Okay. The most important thing is whenever you're loaning private money is you want to make sure that your investment is secured. And how do we do that? Well, as Alpesh indicated, you will hold the first lien position on the property. When sold or refinanced, you are the very first person that is paid back before we take profits. That's incredibly important. You are the first person to be paid. The taxes are paid, you're paid, and then we are paid. Second, you're going to receive a promissory note. That's going to be recorded along with a mortgage. The mortgage is going to be recorded by the closing attorney. We'll go over those documents in just a moment. You're also going to receive a lender's title policy. That's important because if there's any issues where we have to defend the title in court, let's say a disgruntled family member who stepped up and said after the property was sold to us, hey, I have a claim to that property. You were named on the lender's title policy, and you were defended as well during any action that may occur. Of course, that has never happened in 17 years I've been doing this, but again, you still have that protection. You're also going to be named as additional assured on the homeowner's insurance policy. And that's really important because if anything should happen at the property, for example, if there's fire or anything that's cataclysmic, you want to make sure that your investment is insured. And one way to do that is you're named on our insurance policy. Lastly, you're going to receive your balloon payment on the accrued interest plus the principal, again, when it's sold or refinanced. And the funds are returned to you at closing when we refi or resell the property. And then the funds are returned to you. And then what typically happens after the first loan, most of our lenders are eager to just roll those funds into the next project and continue to move forward. Okay, so why don't we move along to looking at the promissory note and the mortgage deed. I won't go too much into this, just to kind of give you an overview of the documents, and so you can kind of get an idea. Now, I'm actually kind of showing you a one of our properties that which there is a loan out. This is a buy and hold. This is a property that we've kept in our rental portfolio. You can see that there's a 7% interest, over a 36-month period. So for this particular investor, he just likes to have a nice, safe investment over a 3-year period where he's going to be getting a 7% return on it. Now, this particular property, 713 Rebecca Road, we are actually have a closing tomorrow morning at 9 a.m. That's when we are purchasing the property. It's already tenant occupied with rental down at $737 a month. Question?
Is there a question?
Oh, okay. So that is your promissory note. Let's move over and have a look at the mortgage. Okay. The mortgage is really your way to secure your investment, your money into the promissory, into the property. Along with the promissory note, these two documents are recorded at closing. So essentially what happens, it's kind of like if you've ever gone, and I'm sure a lot of you own your own residence, you've gone to a closing, you sign your life away with 30 or 40 documents where the bank requires you to sign. For us, we show up, we sign the HUD, we get a copy of the deed, and then I'm the one who puts my name to all of these documents. I'm going to sign the promissory note. I'm going to sign this mortgage. It's going to tell you that, hey, the mortgage is for $65,000. The closing attorney is going to notarize the document, and then the funds are then released to then allow the attorney to then go to the county clerk and to record these documents. So now that maintains your lien position into the property. Again, these documents, if you want copies of it, Alpesh will be more than happy to provide them to you. I'm not an attorney. I would suggest that you consult with an attorney if you want to look through these documents. They have been created by attorneys for us. They're pretty standard, but they're a little bit different than what most of you would see when you're signing your loan documents when you're buying a property. That can take 20 to 30 minutes. For us, we're literally in and out of the closing in 15 minutes. All right, let's go over the lender contact info. Okay, so this is essentially what we need from you if you're looking to invest your money with REI Trader. Typically, we'll ask you to complete this form. We receive it, we keep it on file. It's important for everyone to understand that when we first get started, you will be added to our lender email list. And as we have properties available, you're going to receive an email. And I'd say for a lot of our first-time lenders who are just kind of getting acquainted with our services, they're going to take, the first 2 or 3 just to kind of familiarize themselves with what they see, looking at a particular property, looking at the pro formas, kind of determining, kicking the tires, so to speak, to get a feel for how we do things. And that's fine, and that's what we want. What's really important to understand is once we have this information on file, and then you're added to our email list, then you'll receive pro formas of our existing opportunities that come up on a weekly basis. Once we put something out, a lender is found within 24 to 48 hours. We have a lot of lenders nationwide as well as overseas who use us quite a bit. We've had lenders who've been with us for many, many years. So often what will happen is as you kind of get familiar with our services and kick the tires, so to speak, you may go 3 or 4 days and come back to us and say, I'm interested in funding this project. And if you literally wait more than 48 hours, I'm just going to come back to you and say it's already been funded. So if it's something that you see that you feel that it would be a good fit for you, it would just behoove you to either email or pick up the phone and call me and have a conversation to talk about the property. I'm always happy to provide comps to the property. Again, I'm a real estate broker. I'm always happy to just provide you with comps off the MLS if you feel that you need it. A lot of our lenders, once we establish a strong relationship, they don't really need to see the comps. They kind of see the returns. They see they're getting funds back at closing. The property's performing. They're seeing a nice return, and they feel like they don't need to have that extra step. But in the beginning, if you feel that it's something you'd really like to have, just reach out to me. I'm happy to provide you as much documentation as you need. So the first thing is, when you're not an accredited investor, is that you would opt in to receiving our opportunities, and that could be just sending us an email. The second one would be filling out this information. So we have it on file. If the SEC ever wants to look at our documentation, we can say that you've opted into receiving emails. We have documentation on file. And the third one would be you receiving our opportunities via email. So let's look at some of the pro formas.
Hey, Jonathan, I just want to add something pretty interesting. And I've been telling everyone about this, that you can self-direct your IRA. If you have money lying in your 401k at your old employer, then you can move into a self-directed IRA, and you can invest in this kind of deals. You can buy a rental, you can invest as a private money lender. So this is really important. I've been, talking to a lot of people about this. So Jonathan's company and even anyone else, they usually can accept funds from your self-directed IRA.
Yes,
sorry, but I think this was good.
Yes, that is very much the case. I would say at least 50% of our investors are loaning through the IRAs or self-directed IRAs or 401k, and they get all the benefits of the tax benefits by doing so. There are great administrators out there when it comes to self-directed IRAs. I would suggest that you do some research to find the ones that work for you. But yes, at least 50% of our lenders are doing so through those platforms. Okay, so let's look at one of our deal summaries. Typically, when we send out an email, this is essentially what you're going to get. It's pretty straightforward. This is not rocket science, people. It just gives you a really good overview of the property. And this is actually a property that we bought back in October. And you also have to understand that, with so many projects going on, we always figure that one question Alpesh touched on in his introduction is how long we hold money for. We always factor in 180 days, and that's 6 months. Now, best case for us, if we can get in and out of a project in 4 months, usually that's about the minimum time we've held money. When we're doing some of our large $500,000 projects, we've held money as long as a year. And that's when, you could really get a nice return for you. For us, not so good. Our focus is to be able to get in and out of a project as quickly as possible. For this one, 1141 Carnation Drive, we did buy this property back in October of last year. We did renovate it. It is a turnkey flip. We actually put the tenant in there about 3 months ago. So typically what we'll do on some properties that we own and we're going to then resell as a turnkey purchase for one of our buy and hold investors, we renovated and turnkey this property within 3 months. We put a tenant in there. She's been in there for 3 months. She's paying $850 a month. And then once we have a couple of months of seasoning, and that means that, we have a good track record of rental income, then we take this property and we offer it back out to our turnkey buyers. So this particular property, or assuming that we bought it, we've held it for 180 days. That's the assumption. It's a 3-bedroom, 1-bath, 1,132 square feet, built in 1958. You'll see that we purchased it, back in October. We held it for 6 months. The amount of the loan is for $54,000. The projected sale at the time was $72,900, but that's not the case. The market is very strong right now, at least here in Birmingham, and the property is under contract. We are selling it to James. He's a local investor. He's closing on it in the first week of June, and the purchase price is $83,900. So we're making another $11,000 profit potential on this property. The lender rate of return is going to be 12%. And you can see what your lender profit is. This is essentially what you're going to make on the property. So you take your $54,000 times 12%, divided by the number of days or months that you've had it, and that will calculate what your estimated lender profit is. In this case, it would be $3,195.62. You divide that by your $54,000, and that gives you your 12% interest. Now, your loan to value ratio, we always like to say under 75%. And what that is that we want to make sure that whenever we borrow funds, that we are no more than 75% into a property. That's with acquisitions, renovations, holding costs, marketing costs, commissions we have to pay out. We're no more than 75% of what we're going to resell that property for. In this case, based on these numbers, it's 72%, but considering we're selling it for $83,900, it's more like closer to 68%, 67%. So whenever you see a project like this coming out to you, that loan to value is going to be really important. Now, why is it important to you? The most important reason is if, God forbid, your borrower should ever default, you know that you have a considerable amount of equity in the property, at least 25%. So if you had to foreclose and resell the property, or whether you hired someone to finish a renovation or you want to sell it at a discount, you know you're going to get at least pretty much all of your principal back or then some. There could be some lenders who then find their own team to finish a renovation and resell it. And then they just make a huge profit windfall because, it's not 72%, it's a lot less because we've already done most of the renovation work, and now you just need to finish out the last, 10 yards of it. So whenever you're looking at it, the most important thing to keep in mind is you want to make sure that you're not loaning anything more than 75% of the actual resale value. We call that the LTV, the loan to value. Others is called the after repair value, the ARV, or the appraised value. They're all interchangeable. They're all ubiquitous. You pick the term that you feel is most comfortable to you. How about you want to look at another example?
Sure. We have another example. Let me see. We got
we'll get to the loan payoff in a moment. Okay, so let's talk about the loan payoff. Now, if you loaned your property, this one on 104 Lawson Drive, this is actually an interesting property. This particular investor was a referral from Alpesh, and she's out of New Jersey.
And the investor is part of this group.
Yes, yeah, that's right. Bhavna is part of the group. So she came to us, and she was interested in purchasing her first property, and we sold her a 104 Lawson Drive for $84,900. Now, what's interesting is that we have investors who have a certain amount of risk that they want to incur. For example, let me clarify. Some investors will only want to purchase a property when it's complete turnkey and there's a tenant occupying the property. And then they're ready to close. Bhavna was very trusting, saw the value in our relationship, obviously the value in her relationship with Alpesh being referred to us. And we had this property, it was renovated. We had told her that, look, we are working on securing a tenant. We don't have a tenant yet. She felt comfortable enough to go ahead and pull the trigger, went to contract, closed on the property in mid-May. And just this past week, we signed the lease. The tenant is moving in on June 1st. This is a Section 8 tenant, which means that the state or the federal government is paying the majority of the rent. In this case, it's 100%. The rental amount is $825 per month. So she was aggressive because she did not want to fight over this property to buy it when the tenant was in there. We advertised it to all of our investors. She wanted to get ahead of the curve and say, hey, I am willing to buy this property, but I know REI Trader is going to complete the turnkey process by finding me a tenant, putting a tenant into the property, and then transitioning off into property management. So what that means is that we closed on the property, we marketed it, we found the tenant. We'll be collecting the June rent for her, also the deposit, and then we take that money along with the keys and we drop it off to her selected property management company in the marketplace. As a turnkey provider, just as I digress for a moment, we're very good at the acquisitions and renovations side of it, but we don't handle property management. And it's very important if you decide other than being a passive investor and just loan money, that you want to acquire money and have that recurring monthly income or mailbox money, and you want to have purchase a few turnkey properties, you can do so. But it's important to understand, no matter how good your turnkey provider is with acquisitions and renovations, if you don't have good property management, this is not going to work. So it's important that you are working with a property manager who is dedicated 100% of that time and not a turnkey provider who is just dedicated maybe 25% of their time to property management. So that's a really important key for you guys to understand. But for a moment, let's just go back to the loan payoff and then we'll close it out. And if you have any questions, I'll be happy to answer any of them. So when we're ready to sell this property, it's very simple. About a week, a few days before closing, you're our lender. We're going to send you an email. We're going to send this payoff letter to you. And in this case, we've held the property for 165 days. You're going to sign this document, and then you're going to return it back to our closing attorney. You'll copy us on it. The closing attorney will then, on the day of closing, when I go in to sign the deed and transfer ownership to our buyer, whether it's an owner-occupant or whether it's a turnkey investor, when this letter is signed and the deal is done, the closing attorney are going to wire the funds directly into your bank account, your principal plus your accrued interest, and then at that time, the project is officially closed out. You can come back and say, okay, I'm ready for my next project, and that's usually what happens. So that hopefully gives everyone a little bit of an overview of how the process works. Again, the first thing is to be on our email list to get access to our opportunities, to get the pro formas, the deal analyzers to kind of see what opportunities we have available, pick your opportunity, pull the trigger. We sign the mortgage and promissory note at closing. Other accompanying documents to help securitize your money, for that length of the loan is also executed. And then when we're ready to sell the property, you're going to get a loan payoff letter. Now, the loan payoff letter, this is, in this case, this is when we're reselling the property, but there's going to be cases when we're going to be refinancing a property that we own. in our rental portfolio just to get a low interest rate, and it's still a cash event. Loan payoff letter still applies. So that's basically everything I have to offer, and I'm more than happy to address anyone's questions.
Thank you, Jonathan. Does anyone have any questions before we move on? So it looks like we explained it really well.
That's a good thing. I think for a lot of people, Avtesh, I think it's the analysis paralysis. A lot of people, when I first started in this business, and people go to boot camps, they go to their monthly real estate investor meetings, they go on podcasts such as this, or seminars or webinars, and they amass a great deal of knowledge. But then they just have to get to the point where they pull the trigger. They've done their research. They found some borrowers or turnkey providers or a service like REI Trader here in Birmingham that they feel that they could work with. And it's just then pulling the trigger. And once you do this and you then have your investment and your return of principal plus your interest, and it comes back to you, your first thought, well, gee, that was just super simple, and I'm making 12% or 10 to 12%, and it's better than the stock market. And there's another thing you folks need to understand, that I'm also a lender myself. I loan more than $100,000 a year to my business at 12%. So I'm making $12,000 because I want $100,000 out of my own money every year, minimum, at least that. So along with everything else that I do, I'm still getting at least $12,000 of income coming in, additional income, in addition to everything else I'm doing. And it's really important to have those multiple streams of income. But like you, the first time, even though I've been doing this for so many years, the first time I loaned money to a borrower, I was nervous, but once I got through the first one, it was a very comfortable, simple process, and it was with borrowers that I felt that I can trust.
So you hit the nail on the head, Jonathan. I have been telling this group, and not everyone, but whoever has, had consultation with me, paid or free or whatever, I've been explaining them that it's very important to pull the trigger at some point. Don't get into analysis paralysis mode and analyze, and then you don't take any action. The only way to learn, yes, you can amass education, you can have theoretical knowledge, but the only way to properly learn something is to do it, right? And you can learn driving a car by sitting next to someone or flying a plane, but unless you do it, you wouldn't know that you really know how to drive or fly, right? So that's the whole point. But we have a question here, Jonathan. What is the smallest or biggest deal in last 3 to 6 months you guys have done where you needed private money? He wants to see what is the minimum, what can be the minimum to get started.
Yeah, we buy properties across the full spectrum of areas of Birmingham. I recall one property that we actually kept in inventory. It's in what we call a D, as in David, a D-class low-income neighborhood. We picked it up at auction, and our lender, loaned us, I think, about $40,000 on that particular project. And that was a 3-year note at 7% plus 3% paid out once we refinance the property. So on the low end, $40,000 was where we were at. On the high end, we've got a couple of properties where we just recently sold. One we borrowed about $125,000. The rehab was $135,000. and we sold that property for say probably about over 300. So it was a nice return for us. 2 weeks ago, we sold one of our other projects in an area called Avondale. We borrowed, and also keep in mind that we usually borrow funds as 100%. We don't use our own money. We borrow you're going to loan on the purchase price plus the renovations and all the holding costs. And on the particular property over in Avondale that we sold 2 weeks ago, we borrowed, including the rehab, which is about $100,000. We borrowed about $265,000. We sold it 2 weeks ago for $337,000. So that was a very nice return on that property. We have one property that our biggest project to date right now this year in a very upscale A-class neighborhood called Homewood, where houses are from $500,000 to $1 million plus. The property just went under contract a few weeks ago. This is a property where we've held 9 months or longer. It was a very big project. It was a $150,000 rehab. We borrowed about $400,000 on that project. It's under contract. It's closing June 25th for $535,000.
Jonathan, there is another question. Does it make any difference if lending on individual name versus corporation?
Well, that's really a question for your accountant when it comes to looking at the tax consequences of that, or the legalities of loaning, privately versus under a corporation. I would say that 75% of our lenders are doing so privately under their own name. The only time that you're going to see, for us, a lot of our corporate lenders are when they're syndicating a loan for us. For example, on the property I'd mentioned where we recently sold for $337,000, we have 3 lenders on that. And it was a group out of San Francisco. They came to Birmingham. They were turnkey buyers. The relationship evolved. It expanded. They were really happy with what we were doing. And they said, well, not only can you buy and hold turnkey properties, but you can loan your money and have another revenue stream. And they thought that was a great idea. And for that particular property, we needed, roughly $200,000. And so they kind of pulled their funds together between the 3 of them to come up with the money, and they formed a corporation. And so when it was paid out at closing, it was divided in thirds. And that was an occasion where, a corporation kind of came in handy. But for the most part, most everyone is using their own individual name. When I loan, I do so under my corporation just because I get the benefits of the tax write-offs. That's just me personally. But it's really a question you want to ask for your accountant or your attorney. But I would just say that from the standpoint of our lenders, 75% their own name, 25% are loaning through the corporation.
Okay, thank you, Jonathan. So I think this was great. We exactly took an hour. Anyone listening to this, let me know if you need access to this presentation. I have also pasted all the screenshots from some of these documents, as well as I can share the program REI Trader offers. Anyone listening to recording as well, just email me. Same thing. If you want to connect with Jonathan, feel free to email me, and I will make the introduction. And thank you, everyone, for joining on the short notice. Jonathan, anything else you need to add? I think we are good.
No, I think we're good. I want to thank you for the opportunity to be on your podcast this evening. think it's great service you're doing. When you came to Birmingham, and I would tell a lot of individuals, especially if you're learning to build a relationship with investors such as us, feel free to come make the trip out to whoever you want to loan to, whether you're going to buy properties or whether you're going to just lend your money. We're always happy to have investors come to town. Alpesh has been to Birmingham twice. He knows the market very well. We show them properties. They get to see our office. They kind of see projects before, during the renovations, and after the renovations and the finished product. They get to meet closing attorneys. They get to meet property management. We always welcome anyone, all of you, anytime to come to Birmingham. Every month we have investors coming to town, and 99% of the time, we establish a relationship with them. The 2 points I'll make, final points, is that when you're looking to build a relationship with a provider or an investor such as REI Trader, every relationship is strategic. Whether you're loaning $30,000 or $40,000, each year, or you want to loan more than that, or you want to do multiple projects, every relationship is valuable to us. We look upon you as someone that we want to keep in our family of lenders for many, many years. It's strategic. The second point is, like Alpesh had mentioned, and where we get a lot of our business through referrals. For me personally, I like to have referrals from other investors, whether I'm looking for contractors, whether I'm looking for other lenders, or someone who's coming through us because someone bought a property and referred a family or a friend to us. Referrals is very key. Someone like Alpesh, who is now an active investor, who's come to Birmingham, he's met with us, he's seen our operation. I urge you, if you have questions about Birmingham or about our services, certainly reach out to Alpesh. We're very transparent. We're very open and honest about how we do business. And we see every relationship as valuable. So very important to, understand the value of a strategic relationship, and also how you come to us through referrals. And that's key, I think, to a long-term success of private lending to service such as ourselves. And with that, I'll thank you very much for the opportunity this evening.
Thank you so much, Jonathan. I appreciate your time on such a short notice everywhere as well. And I'm going to upload this recording as well on my website, so you guys will be able to listen. And when I'm making the next trip out there, Birmingham, I'm going to let the group know so that if they want to tag along, they can do so.
That would be great. I'd love to have you back and treat you some of our genuine Southern hospitality. Thank you, Alpesh.
Oh, I know about that. But yeah, I'm most probably next 2 to 3 months I should be out there. So I'll let you know, of course.
Wonderful. I look forward to it.
Thank you so much.